session, I am pleased to introduce Godavari Power and Ispat Limited, a fully integrated player with two captive iron ore mines holding 165 million ton of reserves and over 35 years of mine life. Mining capacity is set to increase from 3.05 million ton to 6.7 million ton by FY26, ensuring long-term cost efficiency. The company operates across the value chain from iron ore and premium pellets commanding 1000 to 1500 rupees per ton to DRI, steel and value-added products supported by a net cash balance sheet. GPIL is entering a high visibility growth phase with expansion in mining and pellets, a 0.7 million ton CRM complex entering into manufacturing and recycling of battery energy storage system, a proposed 1 million ton per annum integrated steel plant and 375 megawatt of captive solar power. Sustainability remains central with a commitment to a net zero carbon by 2050. In summary, GPI offers a compelling blend of integration-led margins, visible growth, financial strength and sustainability. So today we have with us Mr. Abhishek Agrawal, a promoter and executive director. He oversees integrated steel operation and leads business development and global marketing, bringing a strong execution focus and global perspective. Joining him is Mr. Dinesh Gandhi, executive director. He leads strategy and project financing, bringing over 3 decades of experience and strong financial discipline. Without much ado, I would like to hand it over to Abhishek sir to take us forward.
Good morning, everyone. Am I audible? Yeah. Yes. So, we'll go through a quick presentation. She's already briefed you about the company's current plans, the future plans. Still, we'll take you in the last presentation. We had informed the stock exchange. Thank you. Yeah. So, this is what we had published after last board meeting. Quick go through. So as she already announced, we entered into recycling by acquiring 43% stake in Jammu Pigments, setting up a 0.7 million cold rolling complex in the same facility as the proposed steel plant, which we yet to announce to everyone. Then we have already announced the battery storage, BESS. Currently it was 10 gigawatts. Now we have further expanded the capacity to 40 gigawatts in 2 phases, 20 gigawatts of each phase. Steel plant can't talk about much because still it's under evaluation within the group. Once we think it's suitable, we go to the board and announce it at the right time. Solar project 125 is in the execution, should be in operation in next quarter, which is April 27. And we're also on the verge of acquiring additional land of close to 500 acres for additional solar power of 250 megawatts for our integrated steel plant as well as the cold rolling complex. Next is the last quarter's performance, which everyone has seen, so I'll just go through this. Financial performance, highlights. Last quarter we got a major breakthrough. We're the first company in India where we got a PCL approved right from iron ore mining to finish through a secondary route. Usually PGCIL doesn't give approvals, but because of our iron ore mining, the quality we produce of pellets and further refining, we got the approval. So this will add to substantial volumes for a structural mill, which we recently commissioned 6 months back. As I mentioned, the galvanizing products, the steel products are mainly used for PGCIL, which is power grid. This is so in terms of iron ore mining. I'm happy to announce yesterday also we published the last major milestone, which was the final presentation to the State Pollution Board was there. The committee has approved for the expansion plan, and hopefully next couple of weeks or maybe 3 weeks, finally we will get the EC, which including us has been awaited from last almost 2.5 years. So for FY27, we can see a substantial jump in our iron ore mining volume production. This is the current details, pellet, high grade, the balance sheet and stuff. So this is the current capacity, as we mentioned. Currently, it's about 2.35. With the new capacity of the total mining capacity of the current mines will be 6 million tons, and the second mines will be operating at close to 0.7 million tons. For the second mining, just to inform everyone, we will be taking it to 4 million tons from 0.7 million tons currently. It's a low-grade mine where Fe is about 45, 50, but again, it's in the form of magnetite. So we will be also installing a beneficiation plant inside the mines and beneficiating and getting the concentrate which will feed to our current operations. So, but that project will go live for about 3 years from now on, which is FY30. We can see a capacity ramp up and operation of beneficiation in FY30, which is April 29, because we have to apply for additional land, go for the EC, then construct the plant. So next 3 years we'll be working parallelly to raise the capacity. So in next 5 years we're looking at a capacity of close to 10 million as an iron ore mining from currently 3 million tons. Pellet plant, we have recently commissioned a new pellet plant of 2 million ton. So our pellet capacity has increased from 2.7 to 4.7. The new plant is under stabilization, and from FY27 we expect to operate at 90% capacity. So FY27 we can see a substantial jump in pellet volumes, which will be about 4.5 million tons. CRM complex, just to give you a brief, all the orders have been placed, designing is underway, and hopefully we should start the construction on ground by April 27, and we expect to roll out the first output April 26 we'll start the civil work, and April 27 we can expect the commercial production. Solar power, as I mentioned, 125 is already in the construction, and remaining 250 will start the work once we get the land, which should happen in next couple of months. BESS, we have already acquired the land. We have signed an MOU with Maharashtra government under the industrial policy. Designing is underway. We have already placed the order of machines, and again the civil work will start on ground post Holi, which is March 26, and we expect the first container to be out by March 27 or April 27, as we have declared earlier. We have been working on various decarbonization projects. We've tied up with Siemens. We've done an MOU with IIT Bombay. We were the first in country to do a carbon capture 5 tons per day plant for our DRI. Designing is done, the civil work has started, and we have also applied to Government of India under R&D Purchase Department. The final presentation was made last month. We assume it has been clear, but official communication should come very soon. Once we have the communication, we'll announce it to the stock exchange. But it's a big breakthrough. If a government department is approving a project under R&D with IIT Bombay, it will be a major milestone. So we expect to take it forward, and if everything goes well, probably will increase the capacity going forward. On the best side, I am very sure a lot of people have a lot of questions. We being a new entrant compared to our peers who have already established into the solar industry like Reliance, Adani, Wari, or even JSW. So please feel free to ask any question. I'll be happy to answer. I've already updated about other things. Yep. So this is the current economics which I've been sharing with everyone from last few quarters. Last quarter production numbers, the saleable volume, the expand relation of last quarter, the balance sheet of Q2. I'm sure everyone has seen that, and this is the final balance sheet. So I think this is more or less a very brief about the current operations and going forward. I'll open the forum for everyone to ask. Thank you.
Thank you, sir, for your brief introduction. Anyone who would like to ask a question?
This CRM capacity,
Yes.
it is which route you are going?
So we'll be buying the HR coil, we'll be pickling it, then the cold rolling complex, then depending on the quality, so there'll be zinc, there'll be alumina bath, galvalume, galvanizing. So we are making such a basket. We are able to offer all types of quality available. We have also filed for 2 PLI applications under the new scheme. One is for the vinyl coating, another is for the alu silicon coating. So we have incorporated that design into our process. So once we are out with the product, we have the entire basket. So we'll have a cold roll sheets, we will have hot roll sheets, pickle sheets, then we'll have galvanum, we'll have galvanized, we'll have ZAM. So ZAM is something which is very famous in China. It's basically a combination of zinc, alumina and magnesia in a certain percentage. And the fourth one, which is the latest one, is the aluminum silicon, where government of India is promoting under the GPIL schemes. So the 7 lakh ton will be the entire basket, where we can offer our customers with different products of different quality.
So what is the margin addition there and what will be ROC design? You are spending 900 crore there.
See, currently, and if you say a currently price of about say 70,000 rupees a ton, average realization for the entire basket, we see a beta of close to about 8% bare minimum to begin with. So at 8%, you could see so it's close to about 4,000 rupees, 5,000 a ton. So at 7 lakh, or we say 5 lakh capacity, it comes to about 250 crores of EBITDA. So the ROC is hardly 3.5 years on conservative basis. If you make it 10%, 12%, then the ROC is probably 2 years. So it should be a very conservative side because it's a very competitive market. The competition is with the big guys, the JSW, JSPL, ArcelorMittal. So we want to be very conservative because it's a new field for us. But looking at the current basket and new lines, we are confident we can easily achieve a beta of 10% on the entire volume, year on year. So at 7 lakh, it will be about 700 crores at full capacity.
And how much you are spending in the best project and what is our core competence in that?
See, for the best project, initially we announced 10 gigawatt. We've taken a board approval to enhance the capacity from 10 gigawatt to 40 gigawatt in 2 phases. The first phase is 20 gigawatt. So currently, just to explain the entire process, we will be importing cells from China, making the battery pack, fitting the pack in the container with all accessories, the cooling system, the fire system, and supplying to our customers. So one container will be 5 megawatt hour. So depending on customer's requirement, it's a 2-hour charging, 2-hour discharging, 3-hour charging. We'll redesign it with a software and supply to the customers. The USP is, there's no USP because we are a new entrant. I would say everyone who is entering into this industry will be a new entrant because this is something which has really picked up in India right now. If you see the forecast, by 2030, India expects the best capacity to touch 250 gigawatts. Currently, it's about 5 gigawatts in 2026. In next 5 years, 4 years, it will multi-fold and reach a 250 gigawatt capacity. A phase 1 is 20 gigawatts and phase 2 will be 20 gigawatts. So in next 3 years or 4 years, we'll be at 40 gigawatts of annual capacity.
So Abhishek, this is 1600 crore capex, right?
Both first phase is 1100 crores for 20 gigawatts and additional 500 crores for another 20 gigawatts.
So if you can walk us through the capex cycle, the investment period, and by when it will start commencement with something. And why did we get into this? Since this is your baby, what got us into this?
So on the capex cycle, we have already invested close to about 300 crores. We've already acquired the land from Maharashtra government. We've already started the basic infrastructure work at site. So out of 1100 crores, about 300 crores will be invested in FY26. Remaining 100 crores will go into FY27. So that will complete our phase 1. And we expect to order the second line once the first line is stabilized. So somewhere in FY28 Q3, we'll place the order for second line, where we'll incur the entire 500 crores. So from FY26 to FY28, the entire 1600 crores will be spent to build up a capacity of 40 gigawatts. We have already tied up with one Chinese tier 1 cell company called EVE. We are discussions with a couple of more companies. We want to source the cells from 2 different companies so that there is no one-sided.
We'll be importing the cells 100%.
At the moment. See, depending on how industry evolves, if we have to get into cell manufacturing, we will have to do that. But at the moment, it's purely BESS, import cells and assemble, manufacture and sell in the market. So currently duty in import of containers is 11% and duty in import of cells is 5.5%, just half. So straight away, people are directly importing from China at the moment. We have a margin of 5.5%. The conservative side, we have taken a 9% EBITDA on the operating cost, right? So if you see today, per container value is about 70 lakh rupees per gigawatt hour. So for a 5 megawatt container, the value is about 3.5 crores. So if you see a beta of say 7 to 8%, it comes to around about 4 lakh, 5 lakh rupees. So at a capacity of say 20 gigawatt, you consider 80% capacity in gigawatt also. So the EBITDA should be about 700, 800 crores. So again, the ROC is less than 2 years. That is the whole idea.
So you see this pricing, BS pricing, sustainable is right. That's the
At the moment it is, but when capacity goes up in India, we are very sure government will come up with policies where the import duties will go up. If you see the solar industry, the module space, right? Initially, we were importing modules at 0% duty. When capacity was built up in India, duty was input at 40%. Then the ALM came. You cannot import China, modules from China. Now it has come to cell. Now substantial capacity has been built up in India by cell manufacturers. So from July 26, you can't import Chinese cells. And the third phase is the ingot and the wafer, which is further heavy capex. Already the ALM is out for July 28. So if you see big companies like Tata, they've already announced the capex for the ingot and wafer. So we expect the same scenario once substantial capacities get in India, right? Government will start coming up with such policies where import will be restricted and the duties will be raised. So even if there's a fierce competition and the prices go down, duty will support us, to maintain the same EBITDA levels. That is the whole idea. Investment is on the lower side. There will be fierce competition by all the big guys, but all the big guys also are, same as us. No one is an expert in BESS. All are new entrants, right? It's a very tech-savvy industry. So we have ensured all our supplies are from top tier in China. The machine is from a company called Leeds. Cells are from EV. We're talking to CATL. We're talking to Lithium. All tier 1 categories. The EMS is from, the EMS is for a company called Hyper, again top tier. Recently, government announced PCS, which is basically an instrument to convert DC to AC and AC to DC, has to come from India. So what a Chinese company is doing, Chinese companies have established their subsidiary in India and supplying from India. So legally, that's also qualified. So we have ensured we have been sourcing everything for top tier, so that quality-wise there are no challenges.
so. Why did we had 800 crore cash. This is a 1600 crore project. There were other low-hanging fruits also for us. With capacity is increasing. I know from 3 to 6, 6 to 10. There's so much else we could have. Why did we decide to get into BESS?
See, today India's energy sector is on an upward trend, and we wanted to be part in some way to the entire supply chain, right? Because energy is here to stay. If you see the consumption of energy in India is going up by 5% every year, right? Today, people are investing into coal-based power plants, but eventually, if you see battery storage as an industry, will become essential to maintain that grid balance. If you study the data, last year in Rajasthan, 40% capacity of solar was not allowed to inject into the grid during the peak summer season because there was so much of oversupply. And parallelly, the coal-based plants were asked to reduce the load to maintain the grid stability. Now, what government is trying to do is, instead of reducing the load, inject the power, store in the battery, and inject those battery into the peak hour, so that the tariff of peak hour goes down. So that is the concept, where India is moving forward. And it's not in India, it's happening everywhere in the world. Today, Europe's requirement in next 5 years is 400 gigawatts. US is 200 gigawatts. China itself will be 800 gigawatts. So battery storage is not an option. It will be a compulsion going forward to maintain the grid stability when we, increase our generation capacity, be it coal-based, be it renewable, or any other source. So we see battery storage has a very long life. It is here to stay. There will be fierce competition. It is high tech industry. So we have to keep evolving, be at our toes when it comes to technology, and probably we have to get into cell line as well in the going forward. But it's too soon to say at the moment. So that is the whole idea. And we wanted to have ourselves because steel is something we know, it's a standard. EBITDA, mines will get expanded, new steel plant might come up, might not come up. But you can't be only one single line player, right? So there was an opportunity. So we wanted to enter into it. People might doubt whether we can execute or not, but as of now, I am very confident. And once numbers are there, probably you guys also will applaud it was the right decision.
Hello, sir. Yes. Yeah, this is Garvita from Seven Islands PMS. So my question is about Jammu pigment acquisition which we have done. So what is the rationale behind it and how are we going to do the procurement of the raw material? So that is one thing I want to understand.
So, Mr. Dinesh Gandhi, who's right here, he's been heading the operation Jammu Pigment. So, I would ask him to please answer your question. Dinesh, please.
Good morning. Yes, good morning everyone. Regarding Jammu Pigments, uh, like the base, for us, of course it is an unrelated business, but it is in the metal. And if you want to enter into a non-ferrous metal, recycling is the way through which you can enter. So we have invested about 255 crores by acquiring 43% stake in Jammu Pigment. Jammu Pigment offers an opportunity for the company to grow into emerging recycling business, and this company is already operating at a turnover of about 800 crores annually, with an EBITDA of close to about 50-55 crores. We are quite confident that over a period of next 2 years, we can convert this company into a 2000 crore kind of turnover company with the existing capacities and EBITDA in the range of about 100-120 crores. So this is an opportunity to make money at a lower investment. That was the whole premise on which we have invested into that company. We are working with the existing promoter to expand the volumes. As regards the procurement, like any other company in the industry, we have also been procuring the batteries from all sources. Although we have limited sources from the domestic market, but we have started importing in huge quantities from the abroad. We have already increased the volume of battery import in last about 5-6 months, and this volume is going to be increased further. Our sales is almost about 70% currently in the export market. Not only this company is is engaged in processing of critical raw material like industrial waste. So besides lead recycling, this company can do various other rare earth material like tin, antimony, silver, cobalt, nickel. So we have already started making about 100% of the pure tin out of the waste raw material, and we started selling. Our antimony plant is expected to start in about next 2 months. Silver by March end. So not only lead, this company is capable of manufacturing other associated minerals which are there as a part of the raw material and extract it into the pure form, which is expected to increase the profitability. Profitability in the lead is very low, but other minerals is in the range of 25-30%.
And just to add what Dinesh said, Government of India recently came out with a notification of lithium ion battery cycling as well, right? So it will help the best company to partner with Jammu Pigments for recycling of the cells when it becomes a part of propulsion. So we have already started exploring the technology available in the market where you can start recycling the lithium ion batteries as well.
In fact, this is one of the oldest company in India. Although, with the limitation and single promoter, they have not been able to expand. But we are quite confident that we will be able to expand this business. And we will be starting from next financial year giving numbers also. As of now, we have been working and consolidating the operations. We have not started disclosing the numbers. But very soon you will find that we have started disclosing the numbers on this.
Okay, thank you, sir. I have one more questions on the iron ore part. So what is the current market price of iron ore? Second is, what would be the spread of iron ore to pellet? So these two things.
Currently, the price of iron ore is about 6,200 rupees, and the pellet pricing is about 9,500 rupees at the moment. There has been a slight uptake by 5% because the steel market has almost gone up by 10-12% in last few weeks. So hence there has been a slight uptake in the pellet pricing as well.
Okay, and this pellet pricing will be sustained or like What would be the trend?
See, in worst case scenario, it was down to 9,000 rupees. Best case was 10,000 rupees. So 9,500 rupees on a yearly average is very much possible. And that has been the trend in last couple of years.
Okay, got it. One last question, sir. On the EC which is received yesterday on the Eri Dongri, right? So by when are we expecting to commercialize the operations, additional operations, and how much is the impact can we see on the EBITDA level after the full capacity utilization? Can we expect it to be around 2,500 or so?
Okay, so just to clarify, we haven't received the EC. Final presentation was made to the State Pollution Board, which is the last milestone. That was granted. Probably next couple of weeks we will get the EC document. So we expect the volume growth to happen from FY27 because monsoons will be nearby. So FY27 we see a volume guidance of about 4.5 million tons, and FY28 we will achieve 6 million tons. So there has been a slight delay of 6 months because of the delay in EC. So for FY27, 4.5 million tons, and FY28, 6 million tons. That is the guidance going forward. On the EBITDA side, it's very difficult to say. It's a commodity market, but if a mining cost is 3,000 rupees on an annual basis, and we do about 3,500 rupees of EBITDA on pellet, so at a 4.5 million tons volume, you are better judge to calculate the numbers. So currently buying iron from the market and making pellets, there is no money at all. Rather, you won't be able to recover your interest cost as well. So the whole idea is to ramp up the capacity, feed to a pellet plant, and operate the pellet plant at full capacity. That is where the numbers will start coming in. But this will happen in FY27. In FY26, in Q4 also, there won't be much difference. FY27 Q1, you can start seeing the difference in the numbers.
Okay, thank you so much.
Thank you.
I am B.R. Nahar from Valley Emerging Equity Fund. My question is about.
Sir, good morning. Yes.
Good morning. My question is about that the Godavari currently, the profitability comes from the pellet plant. I think 70% or more than that. Now the lot of capacity of pellet is coming. Say Lloyd is installing 12 million tons. Jaswan Eco has announced 1.5 million tons. Jindal is going to commission 18 million tons. So a lot of capacity is coming, plus iron ore capacity is also increasing by big way by the Lloyd to maybe 40 million tons per annum. Similarly, NMDC is also increasing the capacity. So is there going to be temporary price softening going to happen basically?
Sure.
Can you throw some light?
Yeah, so just to clarify, you're very correct. Lloyd's 4 million is operational. Second 4 million is operational in FY27. Third will happen in FY28. JSW is building a capacity for his internal consumption. He's not going to be in the market. Everything is capped for JSW. NMDC 2 million pellet plant is coming up, where some volumes we can expect to come in the open market for sale. See, our USP for Godavari is because of our iron mines being magnetite, low phos, low alumina, and with further beneficiation, we will be producing high grade pellets of 65 Fe. The volume out of will be close to 80%. So 80% will be high grade pellets, 20% will be the commercial pellets, and for high grade pellets, as mentioned earlier, we did drive a premium of close to 1,000 rupees to 1,500 rupees depending on the market, right? Because of low alumina, blast furnace people are attracted. Because of low phos, the DI people are attracted. So there will be volume pressure, but because of our quality, we don't see a bigger challenge to sell a product. There might be, softening of pricing depending on the market condition. But still, on the longer term, we see a healthy bit of at least 3,500 rupees when our mining capacity is running at full capacity.
Okay, sir. Just one quick clarification. When you are talking about 6 million ton mining after the EC clearance, how much, after beneficiation, how much you will get the material for pellet making?
It will be 4.5 million tons, 4.5 million tons.
So
Yes.
that is the maximum you are going to.
Yes, so about 22-23% will be lost in tailing.
Yes.
So from an average of 58-57 Fe, we'll be making 67 concentrate and then making a 65 pellet. So again 6 million, we'll be using about 4.5 liters of concentrate, which will be enough to feed all my 3 pellet plants.
Okay. The last question is about your new plant. You are still evolving about what kind of product you are going to manufacture in that plant. So
No, so we have freeze on the product. Fine tuning is happening, and probably by end of this month we should be able to, go to the board or, first convince our chairman and other executives. When that is through, we'll take it to the board and announce our exchange.
So
Final working is happening, yeah.
So currently the safeguard duty has been announced 12% to 11% in next 3 years, particularly for the alloy flat product. Are you considering that?
No, we are not. So, just to make it clear, we are not getting into the HR coil anymore. We are not into the flat market. I would say एक कहावत है जो होता है अच्छे के लिए होता है. We announced कि we want to do a 2 million or 1 million HR coil, but luckily things got delayed, the land got delayed. और आज देखेंगे तो HR coil is a commodity, right?
No, I am talking about alloy flat product.
No, we are entering into structure product. If we intend to go, we will go heavy structures with a beam of 1,100, mainly catering to infrastructure market. We have no intention of getting into alloy segment.
Okay, all the best.
Thank you.
Let me add to your iron ore question. India steel consumption is growing at about 8-9%, and iron ore production is not going up. So even if pellet capacities are coming, these pellet capacities are going to get consumed in the local market because of the increase in demand.
No, but in short period, because all capacity is coming in the next 1.5 years to 2 years. So there will be definitely excess capacity of pellet as well as iron ore. So whether it is likely to affect that.
No, short period, you can always ignore, but in a medium to longer term, India, the mining capacity is not increasing. Even if you see in last 10 years, production in iron ore mining has not increased considerably. Pellet capacities have increased.
And just to add to what he said, so the third pellet plant, because we are also open for exports, we have tied up with GAIL for natural gas, and we have already started using natural gas for third pellet plant. So for Europe market, which is now CBAM compliant, we will be there at the top tier category in terms of carbon emission. That was the purpose, to use natural gas against the current fuel to shift in terms of carbon emission. So we are also looking at the export market if demand in the domestic market is not very healthy. So that is also open.
Yeah. Hi Abhishek, hi Dinesh. So I have 3 questions on each of the business, one on iron ore, one on Jammu and one on BESS. So first on iron ore, what is the reserve life first for both the mines?
2058 and 2059. So 2057 and 2059. So bigger one is 2057, the smaller one is 2059.
And the royalty on the new mining is going to be similar?
No, it's free premium. The basic royalty is 15%, so plus inmet and all, so it comes to about 19.8%, which everyone is paying apart from the premium.
Understood.
Yeah.
Second on Jammu, like we started with 51% stake first. Then again the promoter, you said 175 primary, 80 crore secondary, then the promoter again putting up 80 crore in the company. So why this step? So first of all, why not go with the 51% as a majority shareholder rather than a minority shareholder?
In fact, we wanted some time before we start consolidating with GPIL, and therefore, and some funds were required. When we started working on with the promoters, we realized that there is a short of funds in the company, and company requires some more money. So we asked promoters to put in additional money, and therefore our stake is down. We have an option to increase the stake up to 65%, and we will exercise our rights at some point of time.
Okay. Somewhere you mentioned number of 800 crore revenue for the Jammu, but when I look at FY24, it was some 1150 crore.
No, 1150 crore is a lot of intercompanies are there. So some businesses were independent of Jammu Pigment. We have all consolidated. So intercompany transactions, if we eliminate, then the net turnover was not less more than 800 crores.
Understood. So lastly on BESS, now first of all, is there a business case if we have to buy domestic cells? Suppose there is a ALMM on the cell itself, that cell is not, import is not allowed for some reason. Is there a business case for the 40
Yes,
gigawatt?
there is. We have already done our basic homework. We know what to do. It will be heavy capex compared to the phase 1, just like module, cell, and so it's a heavy capex. So that's where consolidation will happen because
See, you are putting a cell capacity is a business case. If you are buying cell from the domestic manufacturer, like say Reliance or somebody else is producing,
there is nobody's producing cell right now in India. Nobody forgets.
as of now, no.
Yeah.
As of now, no. But obviously, in the next 2-3 years, there will be some production coming in. So as of now, you are importing cell from the China, and you are internalizing it and selling it to the.
In fact, sale for solar module and sale for battery storage is different.
Different. It's not the same cell.
But
Cell for
Reliance
module, cell for BESS, and cell for EV. All three different categories.
Reliance Exide and Amara, I think, are going into the battery cells also, right?
Exide is for EV. Reliance is doing a 40 gigawatt line with a 10 gigawatt cell line. That is for the captive consumption, mainly for the towers. And recently, which is announced, a huge 5 lakh megawatt solar plant in Jamnagar, the Gujarat area. So Reliance is mainly for captive right now. Of course, he can definitely come in the open market. If ALM is announced, we are ready to venture into cell manufacturing.
Okay.
Yes.
And what would, let's say, earlier we have given number that 10 gigawatt might do some 3,000 crore of revenue wise.
Okay, so 20 gigawatt will do a revenue of close to 6,000 crores. Yeah, 10 gigawatt, 3,000 crores, correct.
So what is the working capital requirement for that?
I think about
In
600
fact,
crores.
working capital requirement is not going to be very substantial, but it could be in the range of 5 to 700 crores.
600, I was about to say.
And mainly, in fact, the working capital requirement will come for as a margin for bank guarantees. In fact, this is a capital good equipment. Once you make the BESS and you supply it, you will have to give performance guarantee. And so working capital requirement on the non-fund based is likely to be very high.
And in terms of cell, just to add to what Dinesh said, on the cell import, so we have done a MOU with company for 10 gigawatt supply in a staggered manner. So there is a life cycle of every cell once it's activated, right? So we'll have to keep importing cells every 45 days from China. So there some working capital will be stuck and on the finished side. So put together everything, about 600 crores is more than enough to feed 20 gigawatt plant.
See, my thought process was that was 45 days of import, some let's say 25 days of internal or 20 days, whatever 15 days, and then maybe get it to the customer. Okay.
It's a 90-day cycle.
About, yeah, 60 days,
90
60 days.
and 60 days also, if you take it 2 months, that will come to roughly about, let's say, 1,000 crore of working capital.
See the cell price today, if you took a 70 lakh container, 3.5 megawatt for 70 lakh per megawatt hour, the cell costing is 40%. So out of 70 lakh, about 30 lakh rupees is the cell price. So on a 60 day or 75 day cycle, you have to calculate accordingly. Rest is container, fire, BMS, EMS, PCS. There are other accessories also.
Okay. Last thing on this, just on the academic side, I know it's still way to go. 1 gigawatt hour battery cell manufacturing will cost how much as of now?
So see, 1 gigawatt doesn't make commercial sense because the
Let's
minimum
say 10 gigawatt.
10 gigawatt will be about close to 3,000 crores.
Okay.
Yeah.
Thank you.
Hello,
Thank
sir.
you. Yeah, we can take questions from back.
Hello, sir. Adar Singh is here from Smart Sync Services. Just wanted to know, like you mentioned, the industry of BESS is very huge, like TAM is huge. But if you see, many players are entering into this segment. So, is my understanding correct? Like we don't have any entry barrier in this industry because everyone is taking this raw material from China and assembling it in India.
Right.
So, do we have any entry barrier in this sector?
See, at the moment, no, because the capex is low. If you see, for a 20 gigawatt capacity, our investment is 1,000 crores. So for today, 1,000 crores is not a big amount, right? But eventually, once substantial capacities start getting built up in India, government policies will come, ALM will come, and once people have to enter into cell manufacturing, that is where there will be an entry barrier. Because for a commercial, line, you have to do a minimum 3 gigawatt line, where the capex will be not less than 1,200 crores again, right? Plus, tech transfer from China itself will be a big challenge, right? With the government policies between the countries. So at the moment, no, but going forward, there should be just what happened in the solar industry.
Why I'm asking this question is because your core competency is in the mining sector. So why you are entering into this segment instead of rare earth and other things?
See, rare is something it is again a new subject, just like BESS. We are into mining. I know mining is quite different compared to a rare earth mining. We want to diversify. We don't want to be even only a steel player, right? In next 3 years, 4 years, all expansion will be over. Then what? You will ask, then what, sir? What is the company's future plan? We just can't add in capacities into steel, right? 1 million, 2 million, 3 million. Doesn't make sense. So there was an opportunity. BESS is here to stay. As I mentioned, India's demand will be 250 gigawatts by 2030. Global demand will cross 1,000 gigawatts. So it is fierce competition, tech savvy, but we are confident we can pull it through.
And sir,
See, let me complete this. Renewable energy is a part of our business. We have been engaged into this business continuously for more than a decade and a half now. We first started with, solar project in the year 2010. We were the first one in India to commission India's first solar thermal power plant. Of course, the solar thermal plant which we commissioned remains the only solar thermal plant which has been successfully operating in India. Although we exited out of that project and sold out to KKR in 2022 because we were not able to expand the capacity, primarily because the technology was costlier and solar PV, expanded like anything. So, you can't say that steel is our core. The renewable energy is core in our hearts. We have a complete team which has been built up, and over and above this, we have been continuously expanding into solar PV even for our captive requirement. By FY28, I think our captive solar capacity will be in excess of 500 megawatt. So, solar is, in our hearts. The entire, company is tuned for that. So please understand that we have been engaged into these activities for quite some time. It is more than 1.5 decades now.
And sir, last question on this, like I'm quite new on this company, so we have around 10% stake in Deccan Gold. So what was the rationale behind this?
No. So Godavari is not invested in Deccan Gold. Just to clarify, we are not invested in Deccan Gold on the company side.
Yeah, promoters have invested in Deccan
On a personal capacity, not as a company. So Godavari is not invested in Deccan Gold. Promoters invested in Deccan Gold. Just to clarify.
Okay.
We had underwritten the right issue recently, which has been concluded, but the issue got, oversubscribed about 1.25 times, so we were not required to contribute anything. And we have got our money back from them. Almost 200 crore of loan was given from GPIL and Identity still, and then that money has, come back.
Okay, thank you.
Thank you.
Yes, hi Abhishek ji, hi Dinesh ji, this is Manav Gogia from Yes Securities. So first question is, much more about the present situation which is across the long steel product value chain. This fiscal year has seen a lot of pricing pressures, right? I wanted to know your outlook about how Q4 is looking for you. How do you see, especially with the pellet plant going under accidental damage, what sort of an outlook can you provide for the next particular quarter? And do we see any pricing adjustments which is taking place as similar to as in the flat products?
Fortunately, there has been an uptick about 10 to 12% in last couple of weeks in the steel prices across the value chain, be it primary, be it secondary. Market was quite sluggish in last few months. Fortunately, the demand has picked up. This should be the peak period where there is no rains. The season is clear to start the construction activities. So we see a good strong Q4 and FY Q1. That has been the trend. If you see, the trend was usually Q3 and Q4, but with weather changing and this global climate, I think in last couple of years the trend has been now Q4 and Q1 rather than Q3 and Q4. So we can see a strong quarter for everyone in the steel market. On the exchange side, it was very, very unfortunate. Something we didn't really foresee. We ourselves to blame. Probably we were a little overconfident. We have taken ample measures. In short, it is never repeated. The lost volumes, as I mentioned earlier, will be made up with my new third pellet plant, and we have raised the guidance to close to 3 million tons for this year, and we should be able to achieve that.
Okay, sure. So that is helpful. My second question is, coming back to the steel plant that we probably want to expand into. Now, over the past year and a half, we have done a lot of back and forth, entering into long products, then going back into flats, now coming again into the long product side. I think we already have the ECs for the first
We have
and the
these.
second
Yes,
phase.
we have these.
Yes, we already have the ECs, and let's say we start investments from FY27 onwards or FY26 end. By what sort of timelines are we looking for the first phase? If you could just give me that.
FY30 should be we're looking at the commercial production if we are going ahead, which is April 29. So if we start the work say in April 26, right, the investment, so 3 years. So anything between 30 months to 36 months is what we're looking at.
Got it. And we are going to be basically into structural steel products, right?
Yes, if we are going ahead.
If.
Subjective, yes.
Okay.
Yes.
Secondly, just on that particular, if
Manav, let me add. In fact, this steel plant, Abhishek is very much interested, but I have been deferring it. So you know our iron mines have got delayed by about 6 months. So I requested him that we should delay the capex unless we have a full visibility in our cash flow. We don't want to go into the heavy capex industry. That was the whole point. And in between we committed investment into base. So it was logical for us to defer the investment into the steel plant. It still requires huge amount of capital, and therefore we have been diversifying into different, like recycling business, which is a low capital intensive. Base is a low capital intensive. So that's the whole idea. So we have been deferring it. We'll at some point of time when we feel comfortable, we'll announce it.
Got it. Thank you so much, Dinesh ji. Just a couple of follow-ups on that particular if, right? If we get into the steel plant going ahead, just wanted to know, earlier we had a plan of having an internal accrual system for the capex. Going ahead, how do you see that changing on the capital allocation side?
See, time will tell you how it is going to be there. So I will not like to comment on this, but definitely our cash flow is going to improve from next financial year. And as our cash flow improves, we'll give you full plan.
Yes, okay, got it. And just in case the plant is not, are we looking for any mining expansions apart from Boria T2? Can we look for a merchant mining entry for GPIL? Is that some sort of things on?
No, see, on the iron ore side, we are very well covered for next 15-20 years. So if you really want to, buy a merchant mine from the auction market, you have to pay a heavy premium, right? That should be a best case scenario where we feel our current, reserves are getting depleted, and we want to create a backup source. So we have been looking out, but wherever we show interest, the premiums are as high as 150%. So we don't see ourselves getting into, buying a mine at a heavy premium because we have sufficient reserves, right? And the second mine is still very unexplored, right? We're just mining 0.5, 0.7 million tons. We want to expand to 4 million, install beneficiation. So I think we are very well covered for next at least 15 years. 15 years is a very long time.
Sure, got it. Just one final question. This would be, if we go ahead with the steel plant, by FY30, we also have one of the largest steel makers in India coming up with, a 4 million capacity on the long steel side. Do we see some challenges?
So they are mainly entering into wire rods and the HR coil. If we enter, we will be heavy structures. So we recently commissioned a light structure mill in Araspat. So we want to, offer the full basket to our buyers. So right from a 45 angle to probably a 1100 beam, where it's complete value addition. Just like what GPIL Raigad does, there is another plant in India which is ISCO Burnpur. So right now in India there are two plants for doing heavy structures above 600, which is ISCO Burnpur, part of SAIL, and GPIL Raigad.
And these heavy structures would be linked to the PGCIL contract.
PGCIL, heavy bridges, heavy structures, basically infra for the country.
Got it. That's all from my side. All the very best, sir.
Thank you.
Hello, sir. I'm Vidhi. I'm speaking from CR Kothari and Sons. So, you mentioned that the rights for Deccan Gold was oversubscribed. So, there was no allotment to you as a company.
Yeah, there was no allotment to GPIL because we were not required to contribute anything. We had made some application as a part of the right issue, and out of it, we got about allotment of 4.5 lakh shares.
Which is mere 3.5 crore rupees only at the current market price.
Because your promoter, the Hira Group, they hold significant stake. They hold around 10% in Deccan Gold as a whole entity and around 10% in their island or Kyrgyzstan mine. So,
No, Kyrgyzstan mine will hold 26%. Promoters of, new promoters, not GPIL.
okay, so you won't be having any role in the Kyrgyzstan mine?
No, we are not having any, day-to-day operational role in the Deccan Gold.
Thank you.
Yeah, hi. This side from IG India Family Office. Quite a few time back, you have gotten approval for supply into transmission towers. So, any update over the same or how soon we can?
We are already supplying. So recently commissioned a new structure mill in Araspat, which is part of Godavari. It's a different complex in Raipur only. So billets are going from Godavari. It's PGCIL approved, and we already supplying to companies like Tata, Kalpataru, all the EPC contractors.
So,
Volumes are on the lower side. As as our quality is accepted, because we are the new entrant and there are established players. So we expect to see volume growth in the coming year, FY27 and further FY28.
So how soon we can see you contributing meaningfully into that side? That is the question.
See, currently we're doing about 5,000 tons a month on regular basis. In FY27, we expect the capacity to double, which is 10,000 tons a month. So about a lakh ton from FY27, we can assume it will start going into the PE cell market.
And what do you see as a risk over BESS project?
As any new business can have, right? So of course that is the risk. But fierce competition is definitely there. As a low capex is there initially, because so there is competition. High-tech industry, dependent on mainly in China and other countries. That is the major. On demand side, we don't see a challenge. On execution side, we don't see a challenge. It's mainly on the tech side as things progress, and on the competition side.
Okay, thank you.
Thank you.
So thank you so much for the presentation. Just one question I have is like, since we have a lot of verticals that we are focused on, right? We have BSS, we have Jammu Pigments, we have our coastal, and we have a lot of expansion plans that we have in place. So just a basic question in terms of how do we look at our margins, going forward? Like as of today, it's around 20%. So do we expect it to increase substantially or gradually? How do you think about that?
See, Dinesh, please go ahead.
Absolute EBITDA is going to increase, but in terms of the percentage margin, it is going to go down because of the CRM complex, where the value addition is compared to the steel is lower. Similarly, in base, these are high turnover businesses, and our pellet and steel is compared to them is a lower turnover. So steel is high margin, low turnover. Other businesses are high turnover, low margin. So margin in base or maybe in CRM or at Jammu Pigment is in the range of 8 to 10%. In steel, the margin are likely to be in the range of 20-25%. So at console level, the margins are going to look depressed, but absolute EBITDA is going to be higher.
Yes.
Sure. Thank you so much, sir.
Thank you.
Hello, sir. I just wanted to know what are the total reserves in both your mines for iron ore?
It's close to explored and declared. So total is 165, out of which about 90 million is in Aidongri and about 65-70 million in Boreti. Right. And see, this is currently declared explored. Further exploration is also happening parallelly. And once we find a sizable exploration and sizable volume there, we will of course come back and announce it.
Thank you, sir.
Thank you.
Yeah.
Please.
As far as your company is concerned, the exports are negligible.
Yes.
And to protect the industry, government has put safeguard duty. So basically, what comes out from your talk is, since you are not globally competitive in the core business, you are diversifying into PSCs.
No, I don't agree that. See, as a company, you want to make more profits. Today, if you see COVID period, we did a lot of exports of pellets. We have sold to every continent. Today, domestic pricing is better compared to export pricing. That's why we're not exporting. So it all depends on the commercial value, export relation. If today we get a better export market, we will go in the export market. It's not that we're not competitive. It's that I keep better realization today in the domestic market. If things turn around, we definitely go to the export market. We're very much open for that.
No, if you are globally competitive, then why was the safeguard duty lobbied by the industry?
That is on the mainly you see on the HR coil and alloy steel, because see, you really can't compete with China. If you compare today's China's ex-plant price and today's Indian price, so government has to import duties. Otherwise, no country in the world can survive against China's competition. That is for sure when it comes to manufacturing. So every country, be it US, be it Europe, be it India. So you see Europe, they come up with CBAM, right? They know today the production cost in Europe is much higher compared to any Asian country. So if you don't do that, all the manufacturing companies in Europe will go bankrupt. So if at one time government is doing Atmanirbhar Bharat, right? And second time you're saying you want to, so it can't be both ways. So if you want to invest in India, so you want the market to be in India also, right? So if there is import happening at lower prices, you need some kind of duty. It's very obvious.
No, your core competition is in steel,
Right.
and you're going to BSCS where the market is is very uncertain. Demand is fine, but competition can be really tough and you may not make much money. So that's the question which comes to the mind of the investing company.
See, we are also open for exports, right? But export again, we have, so example, if you do exports to Europe, today duty from India is 0. The same time, duty from China is close to 25%. If you go to US, duty from China is more than 100%, for India is 50%, right? Saudi, there's no duty from any country, right? Today, Chinese are importing in India best. What we want to do is, we want to replace that import into India with a domestic supply. And once there is a oversupply in India, we start exporting. So our export market is always open for best. It's too soon to say right now, but we start producing, the container is out, probably we have more concrete answers. Today, it's just only talk, right?
Thank you.
Thank you. Please.
Hello. Yeah, sir. So the 0.7 million ton CRM complex that we're doing, there the end products are also into structural and infrastructure
No,
segment?
so the raw material is going to be HR coil. We will buy HR coil from the market, process it, and it will be forming the coil. So it will be different kinds of qualities. It will be ZAM, it will be Zinc, it will be galvanized, galvanu. So different chemicals, it will be vinyl coated. The raw material, it will be form of coil only. Yeah, no structures.
No structures, okay. And how do you expect the EBITDA per ton when we make pellet? Currently, I think we also have dependence on external iron ore.
At the moment,
purchase.
yes.
How do you see that changing once the new capacity of iron ore and pellet plant comes up? Because our dependence on external iron ore will reduce, plus the pellets that we sell will also be higher grade.
Correct.
So
Currently we were buying about 50 KT from the market. With additional capacity, currently we're buying about 1 lakh ton from the market. FY27, once the mining production goes up, parallelly we'll start reducing our buying from the market. And from FY28 or Q4 FY27, our buying from the open market will be completely 0. Because our mining will be running at full capacity.
So if you're buying from externally,
3,000 rupees difference, 3,000 rupees.
Difference. Okay.
Yes.
So that will completely be something.
Add to
that
our
we-
profitability.
Okay.
Yes.
So that was 25%. So about 750 is, I mean, I can.
See, today so if we do about, today we're buying about 6 lakh tons, so on a 3,000 comes to about 180 crores. So straight away 180 crores will add it to your bottom line by replacing the external with your own money.
Thank you, that's it.
Thank you.
Thank you. Hi, this is Namit Arora from InGrowth Capital. Thank you, Abhishek ji, Dinesh ji. This has been very helpful, and thank you to the Go India team for organizing this. Abhishek, I have just one question for you. What is your vision for the company over the next 5 to 10 years? What's your decade's vision? Because what I'm trying to understand is, given the strength of your cash flows, you had the opportunity or the luxury to be fairly opportunistic, etc., which is great. You had the ability to do that. But if I take a 10-year view, how do you look at, from a strategy standpoint, how do you look at the company? What are something that you will do, you will not do? Just a long-term view on the company. Thank you.
See, on the best side, we want to be there in the top tier for sure, in terms of capacity. It might sound a little, off right now, being a new entrant, but if you look at other companies, so we're not looking at, 20 gigawatts, 40 gigawatts. Depending on the market scenario, the demand, we are very much confident. We will go into BESS in a very, very long way. It might be 20, 40, depending on the market situation, right? We are fully ready to invest in a big way. On the steel side, mining will be at 10 million tons. Steel currently doing about 0.5, hopefully it will be 1.5. So in not 10 years, but 5 years I can say, if you see current market for Godavari is about 80,000 crores. With all expansions happening and execution, we probably see a market where Godavari probably touching 40,000, 50,000 crores.
Thank you, that's very helpful. And Abhishek, my final question is, from a risk management standpoint, are there any things that you worry about?
No, to be honest. Of course, there can be, few issues in system. So, but as we grow, as the company grows, as challenges come to us, we will take care of it. But at the moment, I don't see a substantial issue where, we really need to dive into at the moment.
Thank you very
Things
much.
are pretty much taken care from compliance angle as well.
Got it. Thank you very much, and all the best to the entire team.
Thank you.
Thank you.
Thank you so much. With constraint of time, we'll take this as a last question. We'll have a 10 minutes break and we'll start our next session at sharp 12 o'clock. Thank you everyone. And
Thank you.
team.
Yeah, thank you everyone for joining with us. Thank you very much this morning.
Thank you so much, man. Thank you so much, guys.
Of course, thank you Rakesh ji for arranging this.
Thank you, Rakesh ji, Sheetal and the team. Thank you so much.